Hi everyone, this is Emily and I'm a digital transformation consultant at Hyperbots. I'm very pleased to have on the call with me who is the VP of FP&A and taxes at Extreme Reach. Thank you so much for joining us today, John. It's really great to have you.
Thank you for having me.
So, John, we are here to discuss the best practices and common challenges related to GL coding and the chart of accounts in SAP, especially when dealing with multiple legal entities across different countries. So let's just dive right in. Why is it that having a well structured GL coding scheme in SAP important for an organization?
It's really important to have a structured GL coding and that there's controls around it. It's because it provides a standardized way. And as you said, too, multi-legal entity and across the globe and things, if you have different structures, it's going to be impossible for systems to know what's in those different entities and things like that. And to roll up in consolidations are very difficult. And so this structure enables like the clear financial reporting. You'll have less reliance on like mapping tables and things like that, and you'll have more consistency across the globe. You'll have accurate decision making, so you won't like get mixed up between different types of accounts and things like that. It also ensures that you're compliant and local and international accounting standards are met. For example, a consistent coding schemes also allows the organization to quickly generate the consolidated financial statements, like I was saying too. If you don't have that, it gets very complicated and it's hard to go through the taxes during the year, and also from an audit standpoint too, it gets very complicated.
Understood. Moving forward, and this is a question that I've heard multiple times with multiple answers. So, what are some of the best practices you would recommend for designing a GL coding structure in SAP?
Yeah, the biggest thing is to make sure that you have consistency. So there's ideally one chart of accounts from a global standpoint that rolls down based on and has the rules and descriptions and everything that everyone can use, and that's used across the globe. It's not just used for one legal entity, and there's not separation or ability to go and do it just at the local levels and things. So but then at the same time, you need to have the granularity, so maintain an appropriate level of geocodes. So you still need to get to the detailed level to categorize all your like current assets, non-current assets under those things, cash, accounts receivable, to make sure that you use those standards too, what the numbers are, like 1100, 1200, and make sure that there's consistency of which ones those are, so it's easier to roll up again. This provides a detailed view without like overcomplicating the structure. The other thing is to make sure it aligns with the business needs. And I think this is one of the more challenging things, is to make sure that you not only do it based on your accounting, but you get out of the box and you understand the reporting requirements from the actual business on how they want to look at it from a management accounting standpoint. You sometimes need to add accounts for that, but don't mix up using GL accounts versus using cost centers, departments, product codes, and other things. So it's important too that you don't just use the chart of accounts for every dimension, because that makes it more complex. From a alignment on the GL accounts, it's critical. Like a retail company has multiple sales channels, like in-store, wholesale, those types of things. If you want to understand the profitability, pricing schemas, and things like that, you need to break those out. Separate revenue account for online sales, like 4001, 4002 for in-store, and you make sure that you use those same number schemas and codes to make sure that those are broken out so you can do pricing accurately, make good decisions across the board. The other thing is to make sure that you're updating and reviewing whether those accounts are being used and whether it meets all the requirements, so that you add new clients if there's new lines of business. This is actually something I'm going through right now, is that those weren't upkept, in some of the companies I've been at and things, and I'm actually going through a project to do this and to clean up, to make sure that the lines of business, I don't have to go down and look at like a BI tool to try to figure out and break out our financials because it's not in the ERP. So it's critical that you keep up to date too. If there's like new types of businesses, new products and things like that, that you're breaking out things appropriately that you would need to look at, so you don't have to, so you can actually pull your financial reports from your financial system. The other piece is the automation and validation. You can minimize the errors by and automate the repetitive tasks if you're consistent across the globe through SAP's validation rules. So setting up the rules to automatically allocate expenses to the correct cost centers in the correct areas, it reduces the risk of errors.
Got it. Thank you so much for that answer. It really adds a lot of value. So, John, what are some of the common errors or mistakes companies make when managing their GL coding structure?
Yeah, and I've kind of touched on this, is to use different codings or number schemas and things
Mhm.
across the entities, or even within the actual account. Even if it's one entity, you'll see sometimes you'll mix up and you'll have different number schemas because they ran out of numbers, or they changed, or they didn't know what the numbers were and they just added the next number versus keeping it consistent. So like marketing expenses are 5001, or your OpEx are 60. So making sure that they have purpose and that you stick to that is critical. The overcomplication, so getting a GL account for everything basically to break out is not useful. And because you can look at the transactions, so you need to remember that. And if you want to look at, like, I've also seen it where they added a GL account for every single vendor and customer and tried to look at it separately to do like profitability. That gets way overcomplicated. And if you grow, that's obviously not scalable. If you have thousands of customers eventually, yeah, it's not going to work. And it's going to create errors, and you're going to book to the wrong accounts, and it doesn't make sense when you have other dimensions to do that sort of mapping. You can do improper account mapping too, where you're mapping to the wrong places, like travel expenses. I've seen often where you have travel as like a hierarchy and a bunch of travel, and then all of a sudden there's travel showing up other places, where it could be like car rentals. Well, is car rental, why is it not travel, and things like that. So it's you need to keep those rules in place. You duplicate accounts too. I see that a ton, where I have to go consolidate like 10 accounts because you duplicated. Office expenses often end up duplicated, where you have it in like some office expenses showing up in T&E because you used a corporate card or something like that. So you put it in the same spot, but then you also have office expenses like in another space. So there's things like that that you just don't want to do, or consulting contractors, those types of things you don't want to do as well. Neglecting the legal requirements too is making sure that you fail to comply with country specific accounting. So making sure that you have the right setup from an
Mhm.
accounts for VAT specifically to correct the European countries. You have to be compliant on that, on making sure that those are broken out properly.
And John, how do you handle multiple legal entities of the same company in different countries from a GL coding perspective?
Um, yeah, so the key here is to make sure that you use the company codes, that you assign a unique company code for each legal entity in SAP, allowing, so there's are the separate ledgers for those financial records, and so you can do that consolidation. For example, you might have a company use the code US01 for its US entity and UK01 for its UK entity. And if you end up with multiple entities, or I've seen some pretty complex structures where there's hundreds of entities and things, it's making
Mhm.
sure that those are consistent and proper rollups, and also understanding the actual structure of how the rollups and everything happen as well is critical, and that's aligned in the financials. Multiple chart of accounts, so group the chart of accounts for consolidation, like where 1000 represents cash across all entities. We kind of talked about this already, but
Mhm.
making sure that you have a operational chart of accounts too, that for the local reporting needs. So if both the US and UK entities, but local accounts for like VAT receivables in the UK and sales tax receivables in the US would differ to meet specific statutory requirements. So you still have to break those out and have specific accounts, and then you can see that as long as you're doing that, have those broken out in the ledger. Country specific chart of accounts for local statutory. So you might have as well like corporate tax payable that do not apply to US entities. So if they don't apply and they're different things, it's okay to break them out. Intercompany transactions as well. That's critical that you set up right, because there's a lot of that can get complex and it can screw up your intercompany pretty easily. So
Mhm.
make sure that you establish a clear GL codes for the intercompany transactions. So if you use, again, numbers at like 3001 for intercompany receivables, 4001 for intercompany payables, or make sure it's consistent again across of whatever numbers you're using. Use the intercompany reconciliation. So do intercompany, use your ERP, use SAP for your intercompany. I've seen that often. People go to Excel sheets to try to do LEMs and things like that too. It doesn't work well. And currency handling, multi-currency. The systems are designed to handle the multi-currency. So make sure you use it. Don't try to do calcs offline, or don't like try to not implement or use the multi-currency functionalities of you need to do it if you're a multinational and doing business in many currencies. You need to make sure that that's enabled on your SAP instance. That allows the consolidation of the financials to go correctly in the respective currencies. It also, so from SAP's foreign currency valuation tools too, you can help automatically adjust the GL balances based on the exchange rate fluctuations. So if the UK entity records in revenue and GBP, SAP can convert that to USD for the group level reporting and exchange rates. And you don't have to go in and try to manually do it or do another consolidation tool outside of SAP.
So, can you also provide an example of how a company can ensure compliance and accuracy when dealing with multiple currencies across different entities?
Yeah, sure. The US based company, if it has subsidiaries in like the UK and Japan in SAP, the company can be set up in multi-currency types, local currency GBP and JPY. The group currency would be USD, and possibly a global currency could be the euros. All transactions are recorded in local currency in SAP, and simultaneously those records are in the group and global currencies. So you always have a visibility into looking at your financials at a consolidated level in the USD currency. You can also look at constant currency that we're not talking about here, but that's another good tip to have, so you can understand the movements as well and what the differences are if currency didn't fluctuate. SAP's foreign currency valuation tools adjust those geo balances and current exchange rates. If the subsidiary in Japan makes a sale in JPY, SAP will record the transaction in JPY, convert it to USD for group reporting, and it'll adjust the balance automatically to those exchange rates.
Also, John, how can AI help prevent common mistakes in GL coding for SAP?
There's a few ways it can help in the geocoding. It can automate the data entry and make sure that data entry is correct, so you won't have the incorrect. It will also automate some of those repetitive tasks, such as assigning the right GL codes that you create. And if you're consistent across the board, it's easy for AI to do that based on the patterns and based on history. And it reduces the human errors. So AI can learn from those past transactions to predict the GL codes for new transactions. And you can still have a human go in and check, and it's more a check and balance versus trying to get it right every time, which leaves room for human error. You can also do anomaly detection, which AI can detect anomalies or inconsistencies in the GL coding in real time. So if a expense is coded to the wrong department, AI can flag it immediately for review. So if you are using a department and you transacted something somewhere where it's never seen something before, or it's doesn't look right from a trend perspective, or when you do those types of analysis, AI can detect that without having to wait till the end of the month and things like that, and do a full analysis, and you don't miss those things then. You can also, the natural language processing, NLP, AI with natural language processing capabilities, it understands and interprets the financial documents, such as invoices, receipts, or correctly identifies and categorizes them into appropriate GL counts. This is helpful and useful when dealing with these diverse formats and languages. So that also will further help, making sure that you can identify, categorize all the transactions appropriately. You can also predict analytics, so predicting potential errors based on patterns and historical examples. So a lot of this is done manually through just trying to pick the right analysis from people, but this will allow you to do a lot more analysis, or even tell you where to do your analysis and to check and to do things, versus sometimes you catch things a little bit too late or after the close and you have to make a lot of correcting entries. This will get you on top of it. And AI will continuous learning. So it will learn and get better as you clean up and you have more accuracy over time. So it continues to get better, which is a something that we all look for in the accounting function.
Just a couple more questions, John. So, what strategies would you suggest for aligning GL coding practices across multiple countries while ensuring compliance with local regulations?
The number one answer for this is that you centralize a group chart of accounts, but you with the local flexibility. So you have a central chart of accounts that everything has to roll up to, but you allow the local entities to use those country-specific chart of accounts that meets the regulatory compliance. As
Mhm.
long as you keep those in sync all the time, it works out very well. There's also localization features in SAP, that such as the country-specific tax codes, compliance settings, that can meet those regulatory requirements. Standardization of the processes. You want to make sure that you standardize the financial reporting processes, the templates to ensure that you the same across all the entities. You don't want to use similar transactions and have them in multiple. Otherwise, you might have mismatches and incorrect analysis when you do actually a consolidation. So it's critical that you make sure that again the processes are standard too. So if your billing processes, order to cash processes, and things need to be similar across the board. Regular training and reviews too of the finance teams, that you're in constant change in finance. The business needs change, compliance changes, regulatory changes at some scale. So you need to make sure, plus the technology changes. So you need to make sure that people actually know what they're using. They're not using the old versions of all your software and technology that you have out there.
Got it. And just to wind things up, one last question, John. So, how does a well-structured GL coding scheme contribute to faster financial reporting and better decision making overall?
Yeah, so this is you if you screw up the GL coding, you sometimes can't report on things until you're done with consolidations and going through mapping tools and all this other stuff. It gets very complex and you end up catching errors during the close process or too late in the process that you end up going back and forth. It adds days and unnecessary work during your close process. Your data will be inconsistent. You're going to make mistakes and you're going to catch these too late is a big part of it. So this is one of the most critical things you can do, is to make sure that you are consistent. And the automated reporting, if it's
Mhm.
manual reporting today and there's inconsistencies all the time, you end up doing corrections all the time, and then your accounting's not correct. So it's if you don't do this right, you're going to make mistakes, and it can cause restatements, even in tax restatements and all that stuff as well. So very critical.
Thank you so much, John, for joining us today again. It was really insightful discussion, talking to you about chart of accounts and the GL coding for SAP in specific. So thank you so much for joining us.